So this whole thing is blowing up. It's blowing up now. And I'm not just being sensational. This is real. What's happening in gold and silver is real, right? This week should let you know that it's real. And so I'm not just talking, I'm not just gloom and doom. It's not just pessimism porn. This is reality. Right? And you can't, if you haven't been, acting on what I'm saying, don't wait anymore. Don't think you're going to be cute here and I'm going to buy this pullback. You have got to get out while you can before more people want to get out and it becomes a stampede. All of this is going to build on itself, right? How did you go bankrupt? Well, slowly at first and then all at once, right? So it's going to speed up, right? The rate of the collapse until it becomes it's orderly until it's disorderly. So you've got to get out ahead of this and recognize what most people will not recognize. They will not figure this out until after the fact, until it's too late. It's not too late now. Yes, it would have been better if you acted last week, last month, last year, 2 years ago. Okay, I tried my best, right? But you know what? It's still better. It's still better to do it now, right? Than to go down with this ship. So go to Schiff Gold this weekend, as I've been saying, and get yourself some gold before it's above 5,000. Silver, look, yeah, it may go back below. It's hard to say it'll never go below 100 again. It's only 102.5. But again, I was saying the same thing at 80, 70, 60. I didn't have that much time to say it at 60 or 70 because it didn't stay there that long. I was talking about it at 30 and 40. You had plenty of time to buy $30 silver and $40 silver. In fact, you had years to buy $20 to $30 silver. And I was trying to get people to buy it because I knew this was going to happen. I just didn't know when. And it is not over. It's just getting started. And if you really want to make serious money and you're willing to take extra risk, look at these gold mining stocks. Look at these silver mining stocks. They are still incredible bargains despite doubling and tripling or quadrupling because they started from ridiculously low levels and they haven't gained nearly as much as their earnings. So the stocks are cheaper on a PE basis, but not only that, their future earnings are going to grow even more because gold and silver prices are not going to stop going up. They're going to keep rising. And what a week to wrap up. The star of the day was silver. I guess not just the day, but the week. Silver surged about $6.50 today, something like that. It blew through $100 an ounce. We ended up closing around $102.50. All-time record high. Silver's never been above 100. Of course, once it got to 100, it wasn't resistance. It just blew right through it, and now we're above 102. Gold also not too shabby, up about $45 or so, but it couldn't quite make it to 5,000. Gold went out at around 4,980 or so. In fact, I don't think it's actually finished trading yet, so we'll see. But 5,000 is probably not going to happen until Sunday night. In fact, I think gold is going to do to 5,000 what silver did to 100. And again, that may happen Sunday night, Monday. In fact, the percentage gains, listen to these numbers. Silver was up 6.6% today. On the week, it was up 15%. And so far this year, which, we're only maybe, I guess, 3/4 of the way through January. We got another week left. But so far this year, we're up 45% in silver. Now, that's on top of the spectacular gain from last year. Another 45% this year, and we still have a week to go to finish January. And people didn't believe me when I said I thought the metals could do even better in 2026 than they did in 2025. Well, we're already off to a much stronger start to this year than last year. Remember, most of the rise in silver happened towards the end of the year, and now the momentum has continued in the beginning. Gold up about 1% today. On the week, just under 9%. I think about 8.8%. This was the best week gold has had since, I think it was March of 2020. And that was a big rebound from a COVID sell-off. So gold had a great week because it got killed the week before. That's not what's happening now. Gold had this great week when it was already trading at record highs, right? So it wasn't a distressed, bounce back. This was pure momentum breaking out to record highs. And I think that there was some resistance at 5,000. And that's going to give way, I believe, on Sunday night. Year to date, gold is now up better than 15%. I think just over 15.5%. Again, we're not finished with January yet. This could be a better year for gold than last year. Of course, the gold mining stocks, the silver mining stocks, all making new multi-year all-time record highs today. Now investors are finally moving into this sector, but they still didn't gain nearly enough to make up for the lost ground. Given how much the metals have moved and how much higher gold company profits are going to be, the current stock prices don't even come close to reflecting that reality. So I think investors are still kind of shell-shocked. They don't really get what's going on, but they will. There's going to be a wave of money coming in to these stocks and to precious metals, physical precious metals, going forward for the rest of the year, next year, and especially too when we get the money coming out of Bitcoin, which, by the way, Bitcoin was down 6% this week, not digital gold, the anti-gold. And year to date, Bitcoin is positive, but just barely. It's up 1%. I expect that to change by next year. A lot of people, these hodlers, are holding and hoping, and they're expecting Bitcoin to catch up to gold and surpass gold. Not going to happen. In fact, the people who have been waiting are going to throw in the towel. The speculators in the ETFs are going to sell, and the bottom is going to drop out of this market. A lot of the people that are in the Bitcoin ETFs raise the money to make those investments by selling their gold stocks and their silver stocks. That was a huge mistake. When Bitcoin hit 100,000 in December of last year.
I keep telling people this isn't a drill. This isn't clickbait. This isn't doom porn for the algorithm. This is reality. What we are witnessing in gold and silver right now, this week, this month, is the beginning of something historic. And I know a lot of people hearing me still think they have time, still think they can outsmart the market, still think they can wait for a pullback. And that mindset, that hesitation, that arrogance, that is exactly how people get wiped out in financial transitions. I've said this so many times that I'm practically hoarse, but here it is again. You do not wait for a pullback in a monetary crisis. You front-run the collapse. And yes, collapse is precisely the right word. Economies don't implode all at once. They weaken slowly, gradually, invisibly, and then suddenly everything accelerates so quickly that the average person doesn't even know what happened until it's too late. Hemingway said it best. How did you go bankrupt? 2 ways. Gradually, then suddenly. That is what's happening to the US financial system. That is what's happening to fiat currencies. And gold and silver are simply reflecting that process in real time. You can deny it. You can ignore it. You can pretend it's just some temporary spike. But reality doesn't care what you believe. Reality wins. Gold blasting through $4,900 and silver ripping through $100 this week weren't anomalies. These weren't squeeze-driven blips. These were signals, huge, blinding, screaming signals, that the world is losing faith in fiat and rushing toward hard assets. This isn't a crypto rally. This isn't a tech bubble. This is monetary migration. And if you're not migrating with the smart money, then you're on the wrong side of history. Look at silver today. Up over 6% in a single day. Up 15% on the week. Up 45% just this month. For anyone who still thinks this is normal behavior, please show me the last time silver gained 45% in 3 weeks, while the mainstream media barely reported it. You can't, because it's never happened. And that's the first clue that something much bigger is happening beneath the surface. The second clue is that every pullback is being bought instantly. Silver drops $3. Someone scoops up 20 million ounces. Gold dips $40. Asia buys the dip before New York even wakes up. This is not speculation. This is repositioning. And to the people telling me, Peter, Aren't you worried about a correction? No, I'm not. The bigger risk is not owning enough before this thing really blows open. You don't protect yourself by waiting. You don't hedge by sitting on the sidelines. You hedge by acting before the herd even realizes a stampede is forming. Because when a stampede starts in a market as tiny as silver, the people who waited at $102 will cry at $202, then panic at $402, and then disappear entirely at $1,000 because they won't be able to buy anything. And let me say this, because people forget, the physical market is tightening. Inventories are dropping. Delivery demand is exploding. Premiums are widening. Again, if you wait for the paper price to come down, the physical premium will simply go up, and you'll pay the same or more anyway, except with less availability. That's the part amateur investors never understand. They look at the comic screen and assume that's the real market. It isn't. The real market is the physical vaults, the refiners, the sovereign buyers, the electronics manufacturers who don't care about your price charts because they need silver, or their supply chains collapse. Meanwhile, gold is doing exactly what I told people it would do. It nearly touched $5,000 today and is flirting with breaking that psychological barrier on Sunday night. And here's the funny part. $5,000 isn't even resistance. It's not a top. It's not a ceiling. It's just a number. The fundamentals don't stop at $5,000. The debt crisis doesn't stop at $5,000. The inflation problem doesn't stop at $5,000. The interest expense explosion doesn't stop at $5,000. The global de-dollarization trend doesn't reverse at $5,000. We're not near the end. We're at the beginning. This wasn't a distressed bounce. This wasn't a panic rebound from oversold conditions. This was a momentum breakout into uncharted territory. And when you break into uncharted territory, the chart stops being a map and starts being a rear-view mirror. Investors who focus on technical resistance levels in the middle of a monetary reset are like passengers on a sinking ship who are more concerned about the buffet closing. It's absurd. The price action is telling you exactly what's happening. The world is losing faith in the dollar, and people are running to the only lifeboats that exist. Now, let's talk about mining stocks, because this is where the real money will be made for people willing to take on more risk. Gold stocks, silver stocks, these companies are still trading at prices that imply $1,500 gold and $20 silver. Wall Street still has its models pricing in normal historical ranges, which is a polite way of saying complete fantasy. The profit margins these companies are going to report over the next 12 to 24 months at $5,000 gold and $100 plus silver are astronomical. Yet the stock prices still haven't caught up because institutional investors don't believe this move is real. They think it's temporary. They think it's speculative. They think gold shouldn't be this high. Well, the market doesn't care what Wall Street thinks. And the moment institutional money finally capitulates and starts buying mining stocks, it will be like a fire hose hitting a shot glass. These stocks can double, triple, quadruple again from here, and many will. The juniors, well, the juniors will behave like lottery tickets. Not all will survive, but the ones with real reserves, real production, and real management will make millionaires out of people who bought early. Not financial advice, of course, just math. But let's zoom out even farther, because this isn't just about gold and silver prices. It's about the entire monetary foundation cracking. Bitcoin was down this week, down as gold hit records, down as silver blew past $100. So much for digital gold. And this is what I've been saying for a decade. Bitcoin isn't the hedge, it's the distraction. When Bitcoin hit $100,000 last December, I said the top was in. People laughed. They told me Bitcoin was going to $500,000, $1 million, replacing gold, replacing fiat entirely. And now those same people are watching gold hit $5,000, while Bitcoin is struggling to stay positive for the year. It turns out the digital gold narrative was just a marketing slogan. The real gold narrative, the one supported by 5,000 years of history, never went anywhere. It just took a while for people to remember why it mattered. And the investors who abandoned gold stocks to chase Bitcoin ETFs are about to learn a very expensive lesson. Because when Bitcoin finally cracks and the ETF flows reverse, that money is coming back out. And it isn't going into cash. It isn't going into bonds. It isn't going into tech stocks. It's going right back into the gold sector. And when that wave hits, the mining stocks are going to launch like rockets. Now let's talk about this slowly at first, then all at once dynamic, because that's exactly what we've been watching unfold in real time. Gold held steady in the $2,000 to $2,300 range for years. Silver hovered in the 20s and 30s. Nothing happened until suddenly everything happened. Right now, you're seeing the acceleration phase. Prices are not moving linearly, they're moving exponentially. And exponential moves do not give you polite opportunities to buy dips. They give you windows, tiny, disappearing windows, before the next vertical leg starts.